Hey, good morning, Bob Trade Genius. 27th of January. I'm going to go through all the spider sectors, plus the emerging market, precious metals indexes, and then the regular, the big three stock indexes plus biotech. So about 24 charts and give you a perspective on what's breaking out and what potentially is breaking down, and so we'll fire from here. But as you can see here, we've had a emerging markets. There seems to be a reversal, so it looks like the dollar weakness is starting to maybe make a trend change here into emerging markets and into gold, silver, and the miners, as you could see. But this has been a pretty steady look. At money flow just been popping up, popping up, popping up, and then Friday we had to gap up. Now, not to say this stuff won't backfill to go, but it sure looks like we're getting a breakout in emerging markets here. Everything's green for me. Money flow, stochastics, the moving averages, and the direction of moving average. Same with GDX. GDX exploded on Friday, and I think it's breaking out as well. Also getting a little bit of a tickle here on biotech too. So I'm watching this right here. If we get maybe a bit of a pullback and it shoots up like we saw with silver and the silver miners, this could be a this could be a emerging play as well. So just keep an eye on the IBB, and if this thing pops up, I'm going to look for some opportunities within that that sector for some quick wins. Okay. So I think the indexes are, to me, they're neutral. They spent all week last week going nowhere, and but you can't short them yet. It's above its moving average, and stochastics are still on the high side, and money flow is still holding up. But I wouldn't be buying IWM here, but I wouldn't be shorting it either. The Qs look the same. And then here's obviously the short version of it. So like I said, not quite ready for prime time on the short. Same with the S&P. It's a lot of people are calling for the market to start its down cycle tomorrow. Could be. It's just that you just get burned by these algos if you're too early. If you have big money and you can ladder in, that's one thing. But if you're a smaller trader or a small trader, it's just that you just can't afford to be wrong, and they count on that. So just let the trend change first. But neutral on SPY too. Okay, this is what I talked about yesterday. Silver miners ETF, nice breakout, nice retest of the moving average, and I think the silver miners are ready to rumble. And so take a look inside SIL and just look at the silver miners in general. I think you're going to find a lot of good opportunities. Same with silver itself. Boom. And this is what I'm talking about. This is what I'd like to see biotech do. The slower stochastic versus the faster one, and have this thing turn up. And if biotech does that, we'll look for some opportunities there. This is Sprott's palladium and platinum. And I put this one on. I have not had a chance to buy the dip yet. Look at this thing. It's just been a machine. So I'd love for it to get a pull back so I can jump in, but who knows? Maybe I won't. But this is in beast mode. And there's people talking that the London Exchange, that they don't have enough physical and they're getting squeezed. And so, man, that would be great if that started happening to gold and silver too. Okay, we talked SPY already. Okay, we talked Qs. So bonds. Okay, so a lot of people are worried about maybe interest rates going up. This is one to watch. Doesn't look like it's weak to me. A little bit of pullback because I think money sloshed out of bonds and into emerging markets and into the metals and miners. But this tells me that TLT has another up leg coming. It's neutral right now, but I just watched this mostly because of I want to refinance in the next 12 months, and I think I'm gonna be able to sometime mid June next year. I think we're gonna see the 10-year down in the low twos. And so, in fact, I'll bring that up now. I should add that to my... it's always a good proxy for... it's a good proxy for mortgage rates if you're interested in what direction they're going. And so it's kind of neutral right now, but I just don't think the market has a stomach for higher interest rates. So you saw how fast the Fed just reversed course. It wasn't Trump. He was just smart to point it out so he doesn't get blamed. But the banks were taking it on the chin, and collateral was starting to collapse. So we're going to see these rates plunge. I would not be surprised to see the 10-year down at its all-time lows here in the within the next 12 to 18 months. Okay, so sorry about that. Let me find out where I was, and let's see. Here we go. I went off script and screwed up my flow here. So here we go. Gold looks like silver. I don't think it's an accident. Emerging markets, gold, silver, miners, all popped. In the materials sector, I'm kind of neutral on it because I think on the one hand, precious metals are supporting it. On the other hand, the industrial metals are really a play on China. And I think whatever China is doing is not going to work. And they're going to roll over hard. I think that's why people are preparing the market for a weaker dollar, because if the Chinese yuan collapses, it's going to put undue pressure on the US dollar, and I think they're trying to get ahead of that. Energy, the oil's been pushing up, but the energy names are not they're to me they're neutral at best. You could have bought the bottom here if you're a more of an aggressive trader when these things kind of come together on money flow, but you have to be willing to buy bottoms. Financials the same way. I'm neutral on it. There's just simply no way the financials and the banks are going to do well. Either we go into recession and people default, or we start reducing interest rates, and they run out of their ability to leverage the spread. So they only have one way they could try to make money is if we hyperinflate and the assets they own become more relatively valuable and get out of some of their loan book. I think that's the direction we're going. The industrials, neutral. Tech sector, neutral. A lot of people are saying this is breakouts coming, but I just don't. I don't see it, but I could be wrong. But if you're long it, no reason to get out, no reason to short it. But if you're not in it, I wouldn't get in it. This is breaking down. This is the staples. That should give you some pause. Okay, either they're getting out of the staples because they're getting more aggressive, or they're getting out of the staples because people aren't buying them either. But whatever, it's not a sector I'd be putting any money into right now. Utilities are showing some weakness here too. It's a little ironic because interest rates are probably not going to go up, but it's something bears watching because it's interest rate sensitive. Healthcare, neutral. Looks like it's starting to fade a little bit too. Discretionary, so maybe that's the thing. They're going from staples to discretionary because people are getting more confident. But that also broke out a little bit on Friday too. Gapped up and looking pretty decent. And I think we're done. So anyway, my focus is going to be on silver miners, gold miners. I'm definitely going to be dabbling more into the uranium space. We already have some positions on, and but that ETF is looking decent too. That's URA, and that broke out also on Friday. So China and India are building 150 nuclear power plants. I don't think I need to say anything more than that for what the price of uranium is going to go to, higher. Thanks for listening. Catch us if you want to join us. We're doing quite well. Check our track record out on our website, tradelikeagenius.com. doing well in all three spaces, crypto, binary options, and also the stock market. Come follow us and make money. And we have specials running to midnight tonight. Thanks for listening. Bye-bye.